Hey, you guys. So I want to talk about something that I talked about in my live on last Saturday in my school community, where I said I want you guys to keep your eyes on these stocks because there's a high chance that they could be coming down. Now, this was Saturday, simply because last week Trump made a post on True Social about wanting to cap credit card interest rates at 10% for a year. Now, think about it. Who benefits the most from high interest rates or being able to place higher interest rates than 10% on anything from credit cards, from loans, from mortgages, credit card companies, the banks who issue them, and a number of others, right? Even mortgages or car loans, right? These caps cuts into their profits. It cuts into what they are able to make from these balances. Okay, so really quickly, over here on Yahoo Finance, and it says big banks push back on Trump's credit card cap, warning of significant economic slowdown. Now, here's the thing. Of course, not just credit card companies, right? We got MasterCard, we got Visa, we got Capital One, we got American Express. If you saw my post that I made Monday, major day, just from shorting American Express, Capital One, Visa, and MasterCard. I play all four. Now, normally Visa is a little bit slower, but I was definitely expecting anywhere between a $3 to $6 move on it, and it did make a little nice size downside move. But American Express and Capital One is where I made the most, which was down $16 each on Monday. Okay, and think about it, not just these credit card companies. You also have to look at the banks that issue credit cards, and that's Bank of America, Chase, that's Wells Fargo, and a number of others that also saw a pushback on Monday from that particular news that happened last week. And what do you think they're worried about? They say, an economic slow down, but they're mostly looking at one is cutting into their profits, and two, if interest rates are capped. Think about it. When you have bad credit or you don't have the best of credit, you might see something that has a 29% interest rate, right? But the better your credit, the better interest rates you get for credit cards, cars, mortgages, loans, anything, right? That's what they're looking at, because if it is capped, there is a high chance that borrowers who are not in the best situation financially, right, credit or even income, may see it may be much harder to even, apply for a credit card, apply for a loan, but we're mostly looking at credit cards. So it would be harder for them to apply for certain credits because of the cap, and because if your credit isn't at a, well enough point to you could get something 10%, 12%, something lower than a 30% interest rate, you may be denied. And they could be looking at that as, okay, we're having to deny people because we can't increase this 10% on what we're putting on their interest, and therefore you will not qualify, right? So let's look at this really quickly. On this article, it says some of America's top bankers are warning that President Trump cap on credit card interest rate will prove disastrous for lower income consumers and the U.S. economy, not to mention their profit. The lower the interest rates, the lower they make from that. All right, so I don't really think they're worried about lower income consumers. They just worried about those profits because they know we're going to have to deny more people if this cap is put in place. So this part where it's saying such a move would likely result in a significant slowdown in the economy, that is just basically saying, okay, you may qualify for a credit card, but you may not qualify for the best interest rate. Your income may be a bit iffy, your credit, report may be a bit iffy, but you still qualify, but with a higher interest rate. And this is just how banks and credit card issuers, loans, mortgages, whatever, they sort of manage their risk a little bit. Or they're just charging you more to make money off whether or not you are paying on time, how much they're charging you on what you're using and your balances and so forth. Going further down into this article, it says just that if you bring the caps down, you're going to get restricted credit, meaning less people will get credit cards, and the balance available to them on those credit cards will also be restricted. And so you have a balance that's against what you're trying to achieve on affordability. Okay, shares for Wells Fargo, Bank of America, JP Morgan Chase have fallen between 5 to 6% over the past week. Citi stock has dropped more than 7%. Let's not forget American Express was down $16. Capital One was down $16. Visa was down. MasterCard was down. When this type of news hit, the first thing you need to think about is who will it impact the most, and that is where you can go and look for your opportunity, whether a selling or a buying opportunity. In this case, I looked for a selling opportunity, and on Monday, I think across all four of those, I had about a $6,000 day on those, just shorting those alone. And American Express and Capital One was where my biggest plays were, and that was just simply following that simple little news from Trump and carried that over into that next week, and that's what we got. Okay, so I definitely want you guys to keep this news on your radar. Keep those stocks on your radar as well. Even though, we got this massive downturn, of course, we may see some prices retesting some higher levels, but we got some massive gaps on the charts that we definitely want to watch. But I definitely wanted to keep that, to put that on you guys' radar for the remainder of the week and going into next week. Now, you may have missed the big move down, but still something to watch. Still something to kind of keep on your radar as we see how Trump goes about this. All right, so that's what I had for you guys today. So hopefully you can find some opportunity in those stocks. Find a move there for you to make. And with that, I'll see you guys in the next